Welcome back to Brilliant Fools. My name is Adam Green, and on this Technical Tuesday, we're going to go over financial reports. Not in a super deep dive. I've done that already, so look back in the archives if you want to see a deep dive of your P&L, your balance sheet. I think I did a cash flow statement. Look at that as well, and how some of that accounting works, how it adjusts different things. This is more of a technical aspect of what you're going to use those things for. And what you get to know from your P&L, what you get to know from your balance sheet, what you get to know from things like your cash flow statement. And those three right there, those are the three major financial statements that you can get for your business. So when you have your P&L, that's probably the best known report. Let's put it that way. When you sell an item, you record how much it was bought for, you record the costs that went into making that item, and then selling it for the amount that it's sold for. You've got a gross profit at that point, and then you take all your overhead and reduce that gross profit by the overhead. Now you've got your net profit. It's the thing that is most intuitive, I think, probably that profit and loss report. It's pretty easy to see what it can tell you. I mean, it tells you if you're making money. It tells you if you're not making money. What it doesn't tell you is how much money is in the bank, especially with a closely held business. So if you are an LLC, a sole proprietor, if you have an S corporation, a partnership, you can take money out of the business, and it does not, should not, if you're doing your accounting correctly, doesn't hit that P&L. So you can't look at your cash balance or even a reconciled cash account based on your profit and loss statement. But you do see some extremely valuable information there with what it does show. You can see trends if you look at it, monthly or quarterly or something like that, or year over year. You can start to see trends of, am I paying more and more in materials costs? And do I need to increase the price? So you can make good, solid decisions like that based off your P&L. Are my utilities increasing? Is there anything I can do for that? Maybe the cable bill keeps going up, or if you have to have internet, right? If you have cable internet, maybe that bill keeps going up and there's somebody else that can do it for better. Maybe your phone bill keeps going up and there's somebody else who can do it for a better price and give you more of what you need. Maybe you see that you're not spending quite as much as you need to under the advertising section, and you're starting to see your sales slump a little bit. Okay, now in order to increase that revenue, I know I can go and I can start increasing the advertising. And I may have room there to build into it. So the P&L is very helpful in that regard of noticing trends, seeing what's happening, seeing if your payroll is increasing, checking not just your direct costs of what your product or service is how much it's going to cost to get it out there to market, but also your indirect costs, your overhead, even interest comes into it. But it's also going to bring things in like depreciation. And depreciation may or may not be a true reflection of your profit or your loss as far as what you feel when it comes to cash in the bank, when it comes to your take-home pay. So understand that as well. There are certain things, especially as a closely held business, there are certain ways you need to look at it and understand that things may not quite show everything that you would want it to show. It's one of the reasons you have the other statements like the balance sheet and the cash flow statement. So the profit and loss or the income statement, your P&L, and then you've got your balance sheet or the BS. Okay, maybe it's not BS. It shouldn't be BS. Now, I've seen it be BS quite a bit. One of the things that I have seen business owners get in the most danger when it comes to balance sheets is a lot of large negative balances on their balance sheet. You shouldn't have large negative balances anywhere except for maybe accumulated depreciation. And that may be it. I mean, there are other areas where maybe you can have it, but if your credit card balance is massively negative, your bank balance, and then you can't reconcile that to the bank account, there are things like that That shouldn't be the case. What is a balance sheet? It shows your position, really. I mean, it shows the strength that you have in the company, how much equity is still there. It shows what assets are in the company. It doesn't show their fair market value. Understand that as well. So if you have an asset, let's say you've purchased a piece of equipment to make the thing that you sell, and you take depreciation on it. Now, it may depreciate over 5 years, 7 years, something like that, but it may still have a lot of value on the market if you were going to sell it and upgrade the equipment. So even though it may show negative, or not negative, it may show zero on the balance sheet, a net balance of zero for that piece of equipment, that's not the fair market value of it. You may still be able to sell that piece of equipment for $5,000, $10,000, even though it's showing $2,000, $1,000, nothing on the balance sheet. So understand that as well. The accounting depreciation is not fair market depreciation. At the same rate, you could still have some depreciation left to take on it, but it not be worth that much out there, a fair market value. You may have used it up entirely and it's broken and it's worthless after 2-3 years, and it's a 7-year asset, so you're still depreciating it off the balance sheet. But the balance sheet is good for, especially if you've reconciled your bank accounts, your credit card accounts, you've got good, solid data there to know where you are, what your position is. Also, if there are loans that you have and you know you need to repay them, you've got good, solid information there. If you have investments, then the value of your investment should be on there. And it can show value a lot better in that regard. And when I say investments, I mean like cash account investments, if you're investing in stock, or if you put money into another business and purchase maybe some equity in a different business, it'll show there. It may not show the entire value of that, but your cash accounts, it will. And then after you take your assets and you subtract your liabilities out, the rest of that is the equity. That's your equity in your company. That's going to be comprised of your net income in the current year, plus all of it that you've left in the company over the years, over time. If you've taken all the money out, spend it on yourself or whatever else that you spend it on, and not put any back in the company, you could have negative equity. I mean, you could go down into the negatives. Your company may not be worth what you think it's worth just because you see the income. If you haven't been building it and focusing on it, then when you go to sell it, and if you don't know your balance sheet, you could have an issue there for sure. But the balance sheet, I think, is a very important statement that often gets overlooked. And then maybe overlooked even more so, not just by business owners, but even by accountants, is the cash flow statement. I think there's a reason for this. Cash flow, in my opinion, this is my opinion, okay? In my opinion, it is kind of a misnomer. It doesn't really tell the story of what that statement is. In my opinion, a cash flow statement is more of a cash reconciliation statement, because it's going to take the profit and loss, it'll reconcile back the beginning cash to the ending cash while taking into account your profit or your loss. But it's also going to take into account assets that you bought. It's going to take into account loans that you paid off or took out. It's going to take into account, which all of that is cash flow, but it also takes into account things like depreciation. Depreciation isn't as much cash flow necessarily. So it all depends on where it's going, but it is a pretty good statement of showing where your cash is actually going, and maybe not more so than the profit and loss statement, because the profit and loss has a lot of different accounts on there that show where you're spending money. But the cash flow statement is going to show where your cash is actually going, like the bank balance of cash. And it may be that you feel like there's a good solid balance in there, but it ends up being because you just took out a loan. That's why you have the balance. It's not necessarily bad or good. It just is what it is. It may be that you feel like there's not much cash in there, but you may, depending on your accounting method, maybe there's some accounts receivable or accounts payable changes that have gone in that end up being reflected back, and you may be in a stronger position than you think you are. So I think it's good But I will say that I feel like it's more of a reconciliation report. It reconciles the beginning cash, the cash at the beginning of whatever period you're looking at it for, to the cash at the end of that period. How did you get from this balance down to this balance? That's your cash flow statement. So that's more of a technical look at what it is. That's great. What do you do with all that information? Where do you want to go deeper? Like, do you want to get really powerful with it? And if you do, it's time to talk budgets at that point. Budgeting your P&L especially. That's the biggest one to budget. But also budgeting your cash flow and where that cash is going to go. Budgeting is just taking each account that you have and you're putting a certain amount of money to it for whatever period you're going to budget for. So that may be month by month, quarter by quarter, for the entire year, whatever that is. Once you do that, you start to have real, let's say, wisdom with where your company's going to go. You are driving it now. You're not just steering it, hoping that it goes in the right direction or that you have some sort of fuel. You're putting fuel into it. You're putting effort and drive and determination into what's happening with your business when you start to budget. It doesn't mean you're always going to stick to that budget. It doesn't mean things don't happen throughout the year. They do. That's why you run reports that are called budget to actual reports. Now, not only have you budgeted these things, but you're actually going to track what is going on compared to what I've budgeted for. And then you can start asking that question, which is, why? Why is this happening? Why is what I've budgeted not the same thing as what's actually happening? And is it a good thing or a bad thing? Maybe I budgeted for so much in materials and supplies, but I found a better supplier that's giving me a higher quality for a lower price. And now I'm actually in the positive because of that. Maybe budgeting sales, okay, I haven't gotten quite what I wanted to. So now what can I do in order to get back up and try to hit that budget, maybe even excel past that budget? Now I can start asking why. What is going on in my company and what can I do about it to actually make changes? This is that thing that I was talking about yesterday with that mindset. The thing talked about in James that you don't want to be a double-minded person. If you want wisdom, ask God for wisdom. He'll give it to you, but without doubting. Because doubting is when you become a double-minded person that is tossed to and fro from the wind, like a ship without a rudder on the sea, unstable in all your ways, and that is not where you want to be. But the more you decide what is going to happen in your business, the more you have that determination. It may not always go that way. Proverbs says that a man plans his way in his heart, but the Lord directs his steps. Plan your way. Budget. And then things may go a little bit differently, and then you plan again. And you make a different decision, and you adjust for it, and you move forward. But at least then you have some knowledge of what's happening, and you can decide, why is this happening, and what do I need to do about it? Where can I go from here? And as believers, we're going to do that with prayerful consideration, and we're going to ask God, is there something different I need to take into account here? But I don't know of anyone who has really succeeded and excelled in business to the point that they wanted to be without taking that kind of decisive action and that determination. Almost all of them that I know have budgets. They've budgeted somehow, some way. But the ones who don't budget tend to be, and especially the ones who don't budget and don't look at their financials, it's rare that they really start excelling in business. Or if they do start excelling, if the money starts coming in and they start making more and more sales, it doesn't last long. It just doesn't last long because, again, they're getting tossed to and fro and they're getting, tossed super high on that wave and feeling good, but there's a trough that comes and then they can end up falling down in that trough. I don't want that to happen to you. And if you need any help with any of this, I would love to talk with you. This is definitely a passion of mine, is seeing small businesses succeed. I have my views as far as giant corporations and things go in this country. I want to see more people be entrepreneurs. I want to see more people be successful having their own businesses. I want to see people having that drive, that determination, that decisiveness when it comes to operating their businesses and see success in it. I'd love to be a part of that with you, but if I'm not, find somebody who you can do that with and who can help you with it. And hopefully, either way, this has been helpful. Shed a little bit more light about not just what each one of them are, but how they can be used. Just give a little bit of that taste. I didn't go super deep into it. I don't want to bore you too much, but give a little bit of that taste. And then if you have somebody like me on your side who can help guide you in it, I think you go even farther with that. Just having a second set of eyes produces so much clarity. I know it has for me in the areas where I struggle more. And then it just, oh yeah, that makes a lot of sense. And then it comes forth a lot better. Hope it's been helpful. Until next time, thanks.